So our view is that the pound has not yet bottomed, but I agree with you that when you have a medium and long-term horizon, then you may have to look into UK-based assets. So the valuation is cheap on various reasons, not just for the foreign exchange. And I'm expecting that there's more money coming here and trying to invest. But then you have as well to consider what are the near-term risks in sterling. And that is clearly related to the further outcome of the negotiations ahead of the European summit. Now, if we get through this, and you will see, or you could see, that there would be an agreement. So just in that case, which is obviously not yet our base case. But if you would see that, then under those circumstances, sterling would certainly rally. And it would be a rally which is going to catapult it against the US dollar maybe into the 140 and to 150 handle. And when you look at that and say maybe the downside risk is down to 115, you are currently trading at 123. So that actually means you have an asymmetry. And that is where the long-term investor is coming in. And therefore, I'm not surprised to see this announcement concerning the stock exchange. We had the other day, that was 3 weeks ago, I guess, when a Hong Kong investor was considering to buy 4.6 billion into the real estate market here in London. So there are more of those type of announcements coming up.
Good morning, Hans. Lovely to see you. Look, I think Karen and I have probably got the same question. We're both looking really quizzically. I'll go with mine. If it's okay for the Chinese or Hong Kong or whatever you want to call it to say, great, there's an opportunity there, weak pound, great asset, great growth, great prism into the world and to Europe. How is it then that all these, and again, I'm agnostic when the politics, all the Remainers are saying, well, all these international companies are going to leave Great Britain. There won't be all this foreign direct investment if you leave the Europeans as well, because you won't have that access and that prism to the world and to Europe as well. So something doesn't make sense here. Oh, the Japanese are all going to take their car manufacturing home, despite the fact that, of course, these are some of the most productive plants on the planet. But the Chinese think it's a good... Something's gone wrong here. I don't understand it.
Well, what you have to consider is that when you have a no-deal situation and when you get tariffs being introduced, it is going to have a certain impact on existing production chains. And that actually means that the UK will be less part of this global production chain. Now, that is especially impacting manufacturing. But when you look into other areas, such like services and so forth, there could be in some cases even opportunities. So I'm not dismissing what you said, but you have to be differentiating in where you look. So I think that the global production chain and the integration of the UK within that production chain was a major achievement over the past 25 years, and that is going to be scaled back a little bit, and that is going to have an impact on the exchange rate. But when you ask me about where are long-term risk and where are long-term chances, and I would say that maybe on the exchange market and on the asset valuation, you are leaning more into the direction of chances relative to risk.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.